morning, everybody, and welcome back to Morning Markets on Tuesday, the 19th of May. A couple of things that we've been discussing this morning that I'd like to share with you. The first of which was the performance that we saw in equity markets yesterday, with a strong performance in Europe, FTSE up over 4% and the Euro Stoxx 50 up over 5%. That followed through into the US, where we saw US indices up over 2.5% to 3% over the course of the day. We've discussed in these podcasts before a number of the factors that we think are driving markets at this point in time, namely the fiscal support that is there from governments, the monetary support that's coming in from central banks, and the continued narrative from central banks that they will do whatever it takes. And then two things in relation to COVID-19. One, how infection rates and mortality rates are evolving. And then finally, what we're seeing from the medical advances as it relates to both effective treatments and also vaccines. The performance yesterday, I think, can be attributed to the news flow around the potential for a vaccine from a US company, where we did see very positive data points from their initial trial, albeit a very small trial. And I think that speaks to really the importance of sentiment in the market and investor psychology in driving markets at this point in time. It was Benjamin Graham, the father of value investing and one of Warren Buffett's mentors, that coined the phrase that the market is a voting machine in the short term and a weighing machine in the longer term. What does that mean? Well, psychology, emotion, sentiment, drivers in the short term, whereas in the medium to longer term the fundamentals do win out. The other thing that I think is really interesting in markets yesterday was, as we touched on at the beginning of last week, the divergence within equity indices, and yesterday that divergence was very evident, with some of the more economically sensitive sectors performing very strongly. By that I mean, if we look at the Russell 2000, more of a broad focused index on the US economy, that was up over 6%. And then if we look within the Dow Jones, we saw the transportation index up over 7%, and in the banking index, Nasdaq banking index was up over 9%. Those economically sensitive sectors really performing well yesterday. That's something that we will continue to monitor, because I do think this is interesting as we're seeing some of these sectors start to display some characteristics of trying to turn around from what have been very disappointing performances over the course of the year. The other key point of discussion from yesterday, which did also boost sentiment, was the joint press conference held by Angela Merkel and President Macron from France, where they both suggested that they would be backing a 500 billion euro programme from the EU, and crucially that would be funded from the EU budget, where Germany is the largest contributor. So perhaps we're starting to see a movement from some more coordination within Europe. The effect of that was very evident in European bond markets, particularly for Italy, where we saw spreads on Italian debt relative to German debt close quite significantly over the course of the day. In other news flow things that we discussed this morning was around oil demand and potential that oil demand in China is returning to more of a normalised level. That would be a very important indicator for markets to look at, so I'm trying to seek out some confirmation of that at this point in time. What we have is a number of news reports suggesting that is the case. That's it for today. Please join me again tomorrow. Thank you.